600, 660, 720, or maybe 800. Your credit score. What does it mean? Does it even matter? All right, at the end of this video, I'm going to give you 2 things that you can do to keep your credit score in a good place. But again, we want to first find out, does it even really matter? What does it really mean? We all know that credit scores do impact lending. The better credit score you have, you are then seen as lower risk to somebody who's potentially going to lend you money. And the lower your risk is, the lower your rate will also be. And there are some programs, especially with home loans, that you may not even be able to qualify if your credit score isn't high enough. So if you're looking to get money lent to you via a home loan or a car loan or anything else, you're gonna need a decent credit score. But there is a portion that people don't think about with their credit score. That's their insurance. Yeah, your insurance. There's a thing called an insurance score and some other scoring things behind the scenes when it comes to getting you homeowners, auto, and umbrella types insurance. And if your credit score is really low, you're seen as a potential risk or a client that might file more claims. And as a result, they're going to charge you more for your insurance premiums on a monthly basis. Maintaining a good credit score and having a higher credit score can help keep your insurance costs lower. Now, before I reveal the 2 things that you can do to keep your credit score in a good place or increase your credit score quickly, I want to first address a mindset, something that could be a sensitive topic. Most people fall in one of 2 camps. They either absolutely love their credit score, have a crazy amount of pride in it, and do anything and everything they can to keep it at a high place. Now, there are other people who say, forget about credit. I don't need it. I use cash for everything. And I think those crazy folks who are putting credit scores together, it's a conspiracy, and I don't want to be a part of them. Obviously, being on one end or the other isn't really a healthy place to be. You want to be somewhere in the middle. Yes, having a good credit score, it's important, but we don't want to worship the FICO gods. We don't want to make sure that we have genuine pride or especially self-identity in what our credit score is. Your credit score doesn't tell me who you are as a person. It doesn't necessarily define your character or your positive impact that you can make on the world. But at the same time, we can't throw it away. We know that there is value in having a decent credit score, even if you do pay cash for everything, because you will eventually buy insurance. And if you want to have an inexpensive insurance experience, having a good credit score, it helps. So here are the 2 things. Now, the first one, it's pretty obvious. It's pay your stuff on time. But there is a way that you can focus paying on time to help increase it quicker, and an understanding of paying on time that can help you maintain a good credit score. Your credit payment history within the most recent 12 months is what's measured the most. If you have something late that was 5, 6, 7 years ago, that doesn't carry as much weight on your score as, say, a missed payment just a few months ago. So focusing on the last 12 and maybe even 24 months of paying things on time is a really big deal. So if you have a low credit score and you're wanting to increase it, focus in on paying on time every time for this next year. Number 2, and this is one that most people don't know, it's keep your balance to credit limit ratio in a healthy place. So if you have a revolving debt like a credit card, your balance should not come close to the credit limit. If it does, if you carry balances on credit cards, it will negatively impact your credit score. Almost 30% of your credit score is based on this balance to credit limit ratio. In an ideal world, the balances that you carry on revolving debts are lower than 30% of the total limit that you can draw from that debt. But if you're able to keep those balances at 0, that will have a really good impact, a really good positive impact on your credit score. So if you're looking to make a purchase that's going to require a loan, say a home loan, within the next couple of months, keep all your credit cards, as many of your revolving accounts at 0 as possible. Just do what I do. I try to pay off my credit cards every single week. Now, if you found this information helpful regarding credit and how to make sure you have a good credit score, we did another video that's related to credit and buying a house. Steps and things that you can follow to make sure that you're in a good situation with your credit score prior to purchasing a home. We'll leave a link to that video in the description. Now, I did say in this video that these are 2 steps that you can follow to increase your credit score quickly. And that word quickly, well, that's relative. Quickly, not gonna happen in a couple of hours. But if you pay off your balances and you keep your balances low, you should see an impact positively on your credit score within just a few months. And obviously, making sure that you pay on time every time for a year, that's gonna take at least a year for it to happen. We hope you enjoyed this video. We come out with these types of helpful videos every single week. Make sure you subscribe so you don't miss anything.